Ethereum's secret scaling weapon might be hiding in plain sight. I'm talking, of course, about the cryptocurrency project called Mantle Network. Ethereum co-founder Vitalik Buterin recently made a pretty important public service announcement. He came out and he said there must be a shift in focus to layer 2 blockchain solutions, or Ethereum will fail to scale. So I'm going to give you in this video everything that you need to know about the Mantle network, including what it is, how it works, what the MNT token does, what its secret sauce could be. Because you'd be crazy to jump into this crypto token or any other crypto token for that matter without understanding the fundamentals first. So if you're a crypto newbie or you're new to the Mantle token, then this video is for you. So I'll be breaking down everything here very simply for you to help you go from crypto confused to crypto confident. And of course, make sure you stick around until the end of the video to find out what the future may have in store for Mantle, as well as the risks and opportunities of investing in this token. But before we dive in, I have to give you this quick disclaimer. No one has paid us to make this review. The information in this video is provided for free to you for educational purposes. This video is not a recommendation for you to go out and buy or sell or hold the MNT token. If you'd like to see a full portfolio disclosure of all the coins that I own, all my venture investments, all that kind of stuff, please see a link in the description where you can see all that. You can also find a pinned comment on X. By the way, I do have like 20 MNT tokens just for paying gas fees on the network, but I don't have an investment level of it. So let's start at the beginning here. What is Mantle? Now, Mantle is a layer 2 blockchain that sits on top of Ethereum's main layer 1 blockchain. This is designed to fill the gap of Ethereum's limitations currently on chain with crazy, disgusting fees on layer 1 ETH. The idea is to help scale Ethereum apps to mass adoption. Mantle is a blockchain that was created by BitDAO, the decentralized arm of centralized exchange Bybit. BitDAO's soft launch of Mantle was in November 2022 with a test blockchain planned for early 2023 before finally going live on mainnet later in 2023. But that's not exactly how things went down. Instead, BitDAO made a major move and became Mantle. The BitDAO community actually voted overwhelmingly in favor of a proposal back in May 2023 to rebrand as Mantle and to go all in on its layer 2 technology. As part of the rebrand, all of Bybit's BIT tokens were actually converted at a 1-to-1 ratio over to Mantle's MNT token. BIT token holders were actually airdropped their MNT tokens in July 2023 to mark the launch of the Mantle mainnet going live. Mantle benefits in 3 key ways from the BitDAO rebranding. 1, BitDAO was the second largest treasury with around $3.2 billion in assets under management. That's a good chunk of change. This has since been converted into the Mantle treasury. Number 2, BitDAO already has backing from major investors and major VCs such as Peter Thiel's Founders Fund, Pantera Capital, and Dragonfly Capital, among many others. Number 3, Mantle is the first modular blockchain on Ethereum. More on the technical details later, but it's this revolutionary technology that can make really this network be front and center, no longer in just the shadows of BitDAO. Just a month after launching, it had already crossed $40 million in deposits, known as total value locked, making Mantle the 7th largest layer 2 on Ethereum. When you look under the hood, you can actually see why people are starting to bring money over there. Money has been continuing to move in. Mantle brings high security and high transaction throughput to Ethereum, but with very, very, very low fees, as layer 2 networks are expected to do. Mantle's unique selling point is that its modular blockchain structure combines an optimistic rollup with a data availability solution. That's a bit of a mouthful. Stay with me here. Okay, I'll unpack it for you. Mantle's modular blockchain structure means that each layer of the blockchain is separate. So the execution layer, the settlement layer, the consensus layer, the data availability layers, they're all independent of each other, thus allowing them to be upgraded or customized individually as needed and as necessary. With this structure, Mantle becomes very flexible and very scalable. Then there's the optimistic roll-up functionality, which allows Mantle to batch transactions and process them outside of Ethereum. Manta's data availability layer is the first to use EigenLayer's solution, which is called EigenDA. Transaction data is stored there instead of Ethereum directly. This thus saves on computer power and avoids clogging up the Ethereum Layer 1 blockchain, which is good for Ethereum Layer 1 users. Reducing storage space is key to overcoming the scalability issue. Before Mantle actually launched, developers went through a 6-month testing period where the network processed more than 14 million transactions. Now, that is a powerful network with a ton of potential right there. Now, before we break down the Mantle token, which is the beating heart of the ecosystem, of course, just what that MNT token does, let me interrupt the flow real quick to let you know about the best damn newsletter in the cryptocurrency industry, my newsletter. It's called Wealth Mastery. And every single week, we are bringing you the latest, the greatest, the best money-making alpha and insights in the cryptocurrency market. We're covering airdrops, altcoin news, altcoin deep dives, altcoin charts, NFTs, lots of opinion and interesting analysis for you in every single issue. So a lot more than just that. You can join our 110,000 plus weekly readers and sign up for free using the link down below in the description or the pinned comment on X. Now that you understand what the Mantle blockchain is and how it works, let's talk about the token, its uses, and its supply and distribution. So the MNT token is Mantle's utility and governance token. As a utility token, MNT is used for transaction fees and can serve as collateral for different borrowing and lending apps on the Mantle network. But paying for fees is a very important use case that will drive demand. Now, this all incentivizes participation, which helps keep the Mantle network more stable and more secure. As a governance token, MNT gives token holders voting rights to vote for or against, of course, proposed changes to the Mantle network. That may not float your boat necessarily, but it's a good use case. Not only did token holders get to vote for or against the BitDAO rebrand to Mantle, they also got to vote on key proposals relating to the token's supply and allocation to the treasury. Token holders passed a proposal that actually reduced the number of BIT tokens in the treasury from 6.05 billion to 3.05 billion. Those 3 billion BIT tokens that were in the treasury did not convert over to Mantle, but instead were sent to a nominated address to be burned and permanently removed from circulation. That's pretty crazy, of course. The proposal also planned to keep MNT's circulating supply at around 3.2 billion, meaning the total supply would be reduced from 9.2 to 6.2 billion. Now, this one proposal alone allowed the community to make their voices heard on some very, very significant changes to Mantle's token distribution and the way that total tokenomics work. Now, before the proposal was approved, 65.6% of MNT tokens were allocated to the treasury and 34.4% to the circulating supply. Now, the amount of tokens in the treasury and in circulating supply stands at around 49% and 51%, respectively. With 49% of Mantle's total supply in the treasury, these tokens should be allocated strategically to try to help grow the ecosystem as incentives and grant programs and all that kind of stuff. But of course, it's possible to see some of these tokens make their way into circulating supply at some point in the future. So keep that in mind. From the tokenomics, the Mantle token appears to have much less risk of token inflation compared to a lot of other layer 2 networks that have huge amounts of token inflation. But of course, there are no guarantees as things can change. Something else to be aware of is that Mantle's treasury is filled with a ton of crypto tokens that aren't its own MNT token, making up almost a third of its total treasury, including a giant stack of Ethereum. Now that the BitDAO to Mantle rebrand is complete and a new beginning is underway, it can now focus on growing out the Mantle ecosystem with apps and different stuff. Mantle's partnered with NFT marketplace Rarible, for example, and launched a new secondary NFT marketplace called Mantle. Mantle launched its first NFT collection called Citizens of Mantle in September 2023. We also saw Trader Joe, a very popular decentralized exchange, franchise out and launch a Mantle-based version called Merchant Mo. So that integrated with Mantle as well. Merchant Mo's liquidity book gives Mantle users cheaper swaps and better liquidity pool fees due to its concentrated liquidity. Trader Joe's pretty awesome, and Merchant Mo brought all that greatness over to Mantle. Users can concentrate their liquidity between specific price ranges in order to get a better deal. Mantle's also expanding out into the Japanese and Asian markets as a strategic strategy through an integration with the payment protocol Slash Payments. Slash Payments can settle transactions almost instantly on the Mantle network with, of course, its very, very low fees as a great incentive. Whilst Mantle does have the backing of BitDAO and its investors and its giant treasury full of Ethereum, it's still, of course, in the early days and is still a relatively small cryptocurrency project. So we need to talk about Mantle's risks and opportunities before you, of course, make any decisions on whether or not this is something you want to add into your crypto portfolio, or if it's just a video that you liked watching and thought, hey, that's some great information. Now I know more. Mantle's focused on building out its suite of products on Ethereum, which of course have the potential to take market share away from other protocols. The layer 2 wars are on big time right now, and Mantle's a very well-funded competitor. For example, Mantle launched its core second product in December 2023, designed to rival Ethereum's liquid staking protocol, Lido. So Mantle's liquid staking protocol has been designed with Lido's features in mind, but aims to overcome key concerns around centralization. It's been described as a lighter weight, but more modern Lido. Another exciting opportunity that Mantle is diving headfirst into is real world assets. So it's partnered up with Ondo Finance to do exactly that. And together they have launched the USDY token. So it's a token backed by short term US treasuries and bank demand deposits, which is pretty damn cool. Token holders will be able to earn yield generated from those underlying treasury assets. Pretty neat, right? The token is available to buy through Mantle's decentralized exchanges, such as FusionX Finance. Users can also bridge USDY over to the Mantle network through Ondo Finance as well. Now, Mantle's cheap fees means, of course, you can easily play about in the world of DeFi because, of course, the transactions cost just pennies. We're even seeing new meme coins like Puff the Dragon launching on Mantle. But despite all this great stuff going on with development, product launches, all the integrations, there is, of course, one thing that could really hold Mantle Network back from massive success. Maybe more like even a barrier to entry, let's say. And it's the fact that Mantle's MNT token has to be used for everything on the network as gas rather than ETH, like most other layer 2s have chosen to do. So it adds another step of potential complexity that users don't have to deal with on other Ethereum layer 2 networks, like Arbitrum, Optimism, all that kind of stuff. And of course, the layer 2 wars are on big time and competition is huge. So no one's success is guaranteed in the layer 2 wars that we're seeing happening right now. Okay, that's it. Thanks for watching. See you in the next video.